All right, welcome to the Real Estate Equation. I'm Ian Mayer with I Am Home Inspections. I'm here with the lovely Liz Bushman.
Hello, everyone. I am Liz Bushman from the Bushman team at Academy Mortgage. So here to provide you some general knowledge and some value to our Real Estate Equation podcast.
Today, we're going to talk about planning for your 2024. But before we get into planning, I want to talk about a little bit about this graphic I saw and where interest rates are projected to go in 2024. One projection is from Fannie Mae and one projection is from the Mortgage Bankers Association. And I couldn't help but notice their projections for interest rates are a little different. So I was wondering if you could explain a little bit about the two organizations and why their predictions might be different.
Okay, well, it's a great observation. So Fannie Mae and MBA, two very different sources. And what do? Well, Fannie Mae is your investor in the secondary market who writes the credit policies, who sets the underwriting guidelines. And the reason they do that is because they buy and sell mortgage-backed securities, and they basically give banks and lenders liquidity in the secondary market. That's how banks and lenders, without cash deposits, retain funds to approve and fund. So without Fannie Mae in the market, things would be very different. Where you have MBA, Mortgage Bankers Association, which is a trade association for banks and lenders. They don't write credit policy, but they do provide governance and leadership between the government and our very well-read more banks and lenders, small and big. So you don't have to be just the Wells Fargos or Bank of America's. Dating myself because Wells Fargo isn't even in the mortgage part anymore. But
they got into some trouble. So
they got into some trouble. But let's say throwing out Citi, or who's my competition? Bank of Montreal, right? They're the new kid in town.
Yeah.
So their numbers are going to be the same but different because of the economics and the forecasting data that they're projecting. So on the graph, you can see that Fannie Mae is predicting higher interest rates going into 24 and 25 than the MBA.
So where do you think interest rates are going to be? Which one are you a little more in alignment with?
Oh, asking me to pick a side. No, honestly, I really don't know. I'm not an economist. I'm not a bond analyst. But I do read and listen to what the projections are and what's happening on the very day. So I would love for interest rates to drop. They have dropped since this graphic has been produced, and I hope that they stay that way. 24 is an election year, so it'll be very interesting to see what the outcome is.
Liz, here's a question I always want to ask you. How does the unemployment rate affect interest rates? Because you always hear economic forecasters talk about the unemployment rate when they're talking about interest rates. Mm-hmm. How do the two correlate?
Well, it's an economic indicator, the unemployment rate and the jobs report. So look at it this way. In the marketplace, when you have more people working and earning, they're pumping more money into that marketplace. So when they're buying more goods, they're putting money into their savings account. And banks like it when you put money into the savings account. Why? Because it offers liquidity. Liquidity is important because that's where banks are leveraging their cash flow to lend money, whether that's car loans, short-term loans, mortgages, all the above. So they're going to use a percentage of the deposits and lend out the money that you put into the savings account. So if they have a job reports that's high jobs, low unemployment, that shows a stronger economy. Therefore, the marketplace is stronger. Therefore, let's talk about inflation. That would come in. So intermediation being money that consumers are putting into and how they're investing their money. They're putting it into banks versus taking it out, which would be called disintermediation, when they pull money out of the savings and use it, such as, I don't know, buying real estate or Bitcoin or however other people invest their funds. In the 80s, it was Wall Street. So going back to those economic indicators are really important in their deciding factor of what are they going to do, especially the Federal Reserve, on how they're going to look at inflation, and does it need to be controlled and monitored and regulated? Which, where we're at right now, it has been regulated for some time. They've been trying to control that. So hopefully we can lessen up on those controls and charge consumers less on their credit cards and APR. So that federal funds rate is huge in deciding where and how strong the economy is. It goes back to jobs report and unemployment.
Okay. So I understand it's not a direct correlation, but all things being equal, low unemployment is going to tend to indicate towards lower interest rates.
They trend that way. Okay. It's a trend. It's a strengthening of the marketplace. How strong is the U.S. economy?
All right. Thank you, Liz.
You're welcome. Ask me anything.
Let's talk business planning 2024.
Mm-hmm. My favorite.
All right. Well, good. How do you plan your business for 2024?
Well, it's very analytical, I will say, because a lot of ideas come to me and then you have to put them on paper. So number one, you have to write measurable goals. If you want to make X amount of dollars, you have to provide the work to reach your goals and have them be measurable. We call them SMART goals. How do you do it?
You know, how there used to be a way I would do it is I would take the average number we did of inspections per month, because it tends to vary. We tend to be a little busier in the spring, a little less busy in the winter. Mm-hmm. So I would look at each month individually, take the average number of inspections over the last 3 years, figure out the average, then figure out what I could bump it up to, assuming normal growth. And that would be my goal. I'd write it all out. I used to be very analytical about this. That kind of got me into trouble in 2022, because what happened at the end of 22 was the market fell down. And all of a sudden, all my numbers didn't make any sense anymore. So for 2023, I've got very much into market share, looking at the number of homes sold in Los Angeles County in every month, the number of inspections we did, what is our market share? And now for 2024, I'm looking at what are those numbers projected to be? What could our market share of those be? And hopefully increasing our market share over the course of the year. And so writing new goals based on where I think the market is going, what the average number of homes sold in a given month in Los Angeles County will be, and what percentage of those homes we would hope to inspect. So it's a lot more math-based than just shooting some numbers out. But I do think business planning is very important. About 2 years ago, I was leading a lunch with a bunch of realtors at a round table, and we're having a mastermind, and I asked a bunch of the realtors at the table, what is your goal for the next year? And a lot of them looked at me blank, and they went, goal? Well, sell more houses than last year. And more is not a goal, because if you don't actually have a goal, you don't know if you're being successful or not. I mean, you need a certain amount of business just to pay your own mortgage. Mm-hmm. You have a mortgage? I have a mortgage.
Mm-hmm. I have a mortgage.
I know you have one because I inspected your house.
Yes, I'm a past client. So.
But, you have certain expenses, and so you need a certain amount of business come in. I know with real estate agents, it's a little more complicated because you don't get paid every 2 weeks or every month.
No, they are paid on per sale.
But you obviously have to look at what your sales are going to be projected to be and divide that up over the time so you can make your make your bills. So a business plan is very important, and I think it's very important to look at, the amount of sales you project, when you might hope to have them, and where those finances are going to come from and how it's going to be split out over the months.
Okay. Another way or an idea is to income base it. How much money do you want to make in 24. And this was a way that I've been introduced to business planning is how much money do you want to earn? How much before taxes, of course, because whether you're a realtor, or loan officer, or anybody in the real estate field, we look at before taxes, right? So how much money do you want to earn? And then take a look at your average sale. Not the highest, not the $5 million, unless that's your luxury market, but you take your high and your low and you take your average price. With me, it's what's my average loan amount. So in looking at that, and how many units do you have to sell per year, per month to get to that number? So the math, and the activities that follow with those projections should last over any type of market. But, we always do have the unknown that happens. So you do got to give yourself a little bit of wiggle room, because I didn't reach my goals this year for 23. But that's because 23 was a very different year for many reasons, not just interest rates. But there were a lot of banking changes throughout the lending environment, from products and underwriting and staffing. And it was a hard year for a lot of people. So not denying that, but there was always a caravan, and I'm a Burbank Association affiliate, and I go to the weekly caravan. Regardless of what was happening, there were always those that showed up with their listings. So as a lender who was looking at my numbers in a not so exciting fashion, knowing that I'm still here and still putting in the work. It's those activities that you do, whether it's door knocking, and I think we're going to get into that into our next episode on how you do your marketing, but putting together a marketing plan as well as a business plan that coincides with what you want to make, what you want to earn. The first time I ever did it based on earnings, someone goes, "That's it? That's all you want to earn?" I go, "Well, I want to make sure I'm going to measure. I'm going to make it." Because anything above that, I'm above my goal.
It works. One of my mentors used to say, work it out backwards. Figure out where you want to be and work out the steps backwards to where you are. Which is basically what you're saying is, figure out how much money you want to make and then break it down by per month. And I said, I do it on a sliding scale, knowing that we're going to be busier in spring, less busy in the winter. Yeah. Summer usually is busy on both ends with a lull in the middle. And that's how we do it. Yeah. All right. So everybody out there, get together your 2024 business plan. If you don't have it, write some numbers down, write it down and make it your goal. It's Ian with the Real Estate Equation. Ian with IM Home Inspections. Inspections that matter for people who care. 818-298-3405.
And I'm Liz Bushman with the Bushman team at Academy Mortgage. And if you don't have a business plan, I have one for you. I can share with you specifically for realtors. So reach out to me. I am also on Instagram at Home Loans for Heroes, or reach out at 714-478-7920. Thank you.